American author and former computer intelligence consultant Edward Snowden declared on Twitter that the price of Tesla stock is still too high. He wrote this in response to a tweet by Tesla's CEO, Elon Musk, who asked the public whether he should let go of some shares. Snowden is not the only one who seems to believe this. Tesla's market capitalization recently moved well past $1 trillion, but the independent investment research firm New Constructs believes the company is overvalued by roughly $1 trillion of that. The firm's CEO, David Traynor, says Tesla shares could fall as much as 88% to roughly $150 per share. Is Tesla's stock price actually too high? Could we be seeing a fall in the future? Keep watching to find out more. The stock market valued Tesla Incorporated at $117 billion in January 2020. That sum had risen to $658.39 billion by the end of the year. Tesla's stock subsequently crossed the $1 trillion market cap threshold in less than a year, reaching that milestone on October 25, 2021. Tesla's stock has skyrocketed in value in a short period of time, perplexing investors. It also raises an important question. Will the same reasons that pushed Tesla to a $1 trillion valuation during the pandemic enable the company to maintain its momentum afterward? While individual investors and Elon Musk's tweets have aided Tesla's spectacular growth, there is a Tesla financial complex at the heart of the electric vehicle maker's stratospheric rise, according to the Financial Times. Options, stock-linked funds, and climate tech-focused investment vehicles are among the investment instruments included in this complex, and they have a significant impact on the equity and derivatives markets. The stock and members of this complex have a symbiotic connection. As Tesla's market clout grows, funds and derivatives with exposure to the stock yield outsized profits, attracting more investors and expanding the company's power. Tesla, for example, had a stake in 106 exchange-traded funds in July 2018 and was holding 244 ETFs by December 2021. Tesla's inclusion in the S&P 500 index in December 2020 has increased the exposure of funds tracking the index to the company's shares, and they've received the benefits of the stock's price rise. With a 1.6% weighting, the company entered the S&P 500. It was weighted at 2.5% of the index at the start of November 2021, and it has contributed about a quarter of the index's returns. Tesla accounted for 4% of the Russell 1000's overall weighting in November, a similar scenario to that of the S&P 500. Fundamentals take a backseat during times of excess, and it's been the same with Tesla. Despite producing a fraction of the cars produced by competitors such as Ford Motor Company and General Motors Company, the company's market cap in December 2021 was about 5 times that of its competitors. The promise of a future dominated by electric vehicles accounts for a large portion of Tesla's valuation and related financial products. That world doesn't exist right now, making Tesla's current price seem absurd. While the financial juggernaut machine powering Tesla's wild viral ride in the markets has artificially inflated the company's valuation, it has also helped reinforce the company's fundamentals. Tesla's investments in manufacturing facilities were aided by the influx of investors pouring money into the company's stock and related financial products. Bonds which need regular payments have become less important to the corporation. To capitalize on demand for its shares, Tesla issued $10 billion in fresh equity last year at prices that were roughly 9 times those of 2019. This inflow of cash has allowed the corporation to open additional plants in Austin and Berlin. Once they're up and running, together with the production plants in Fremont and Shanghai, the company should be able to ramp up its vehicle deliveries. Tesla only just recently reported adjusted earnings of $2.54 per share, up 218% from the previous quarter and marking the company's 4th consecutive quarter of double-digit growth. Revenue increased by 65% to $17.7 billion, exceeding analysts' expectations of $17.1 billion. Furthermore, despite continued supply chain challenges, the electric vehicle manufacturer anticipates a significant increase in output in 2022. However, Tesla stock fell after the firm said that no new electric vehicles would be released this year. Among them is the much-anticipated Cybertruck. Tesla, on the other hand, intends to concentrate on increasing production quantities of existing models at both existing and future factories. For now, Tesla has the enviable problem of demand outstripping supply. Production launches in Austin, Texas and Berlin are key to alleviating these issues, analysts say. Its factory in Germany will eventually produce the bulk of Tesla's vehicles destined for European customers, starting with the Model Y crossover SUV. Tesla has significantly increased its manufacturing capability. Over the next 10 years, Musk hopes to produce 20 million electric automobiles. This is more than double the present output of other automotive behemoths. As a result, it's on a quest to significantly increase its production capacity. When Tesla begins producing cars in Germany, it will compete with the electric vehicle market of three well-known German brands: Volkswagen Group (VW AGY), BMW (BMW-YY), and Daimler AG's Mercedes-Benz division (DDAIF). There's a distinction between the price of a company's stock and the price of its stock. A company's stock can be expensive despite its dismal performance. That's not a good combination. A corporation might be excellent while its stock remains inexpensive. That's a good combination. But what about a company that is almost certainly great and has a high stock price? Tesla is the company in question. On this issue, investors are split. Haters or lovers, both supporters and opponents are adamant in their beliefs. There isn't a lot of nuance here. Elon Musk is well known for claiming that the company's stock price is too high. Despite his warnings, Tesla's stock continues to rise. However, Musk now appears to be sounding the alarm, claiming that Tesla stock, along with the broader stock market, has reached its high. From January 2019 until now, Tesla's stock price has gone from around $60 a share to over $1,000. This means a Tesla investor who bought $1,000 worth of the EV maker stock has seen his/her investment grow 16-fold to $16,000, though the stock seems to be on the decline now. In comparison, the S&P 500, an index that includes 500 of the top publicly traded US corporations, has returned 90% in the same 3 years. This implies Tesla has outperformed the market by more than 17 times in the last 3 years. Tesla's meteoric climb has resulted in tens of billions of dollars in losses for individuals who gambled that the EV maker's stock price would fall by shorting the company's shares. Despite the tremendous surge in Tesla's stock price, many believe the Austin, Texas-based electric vehicle manufacturer is only getting started. Cathie Wood, CEO of ARK Invest, is the most well-known of these Tesla bulls. Tesla's price objective for 2025 is $3,000 per share, according to ARK Invest. If ARK's prediction comes true, Tesla's stock price will increase thrice in the next 3 years. That $1,000 invested in Tesla stock in 2019 will be worth $50,000 in 2025. Tesla's already astounding $1 trillion valuation will rise to $3 trillion. In comparison, Toyota, the world's second most valuable automaker, is presently valued at $300 billion. However, hints have begun to emerge that the CEO Elon Musk is not one of them, at least in the short term. Despite Musk's repeated claims that Tesla's stock price is too high, the EV maker's shares have continued to grow, and Musk appears to have accepted this reality. Musk's dissatisfaction with Tesla's stock price right now has less to do with the performance of the electric vehicle company he started and more to do with the larger stock market and economy. The investors are optimistic that Tesla would dominate the production of electric vehicles in our clean future and believe that other manufacturers potentially might end up standardizing on Tesla software architecture. And nothing about this story has deteriorated. This is what the bulls still believe. In other words, that bullish 2035 outlook hasn't really improved much for Tesla since late 2019. But in these few years, Tesla shares have exploded by over 1,500%. It's been a 16-bagger in 3 short years. They have doubled, doubled again, and doubled yet again. Oh, and they've doubled again for good measure. Even if a lot of things happen perfectly, it's impossible to imagine the stock's future looking anything like its recent history. For this not to end terribly, a lot of things have to happen perfectly right, many of them outside of Tesla's control in my opinion. What do you think about the price of Tesla's stock? Comment down below.